Hey guys, so let's talk about what is growth. What is a growth stock? What is growth investing? Growth investing is basically investing in a stock because the company associated with that stock, in your belief, will grow in value over time because you're seeing their revenue grow, you're seeing their sales grow, you are seeing based on facts and financial statements that the company is doing better and better every month, every quarter, whatever. So growth investing is trying to pick a stock to invest in based on the fact that their value, the value of the company as a whole, is increasing. So if the price of a stock is say like this, $27, and then over here, let's say when it's still at $27, in all this time, it's grown its revenue, like doubled its revenue or something, and doubled its profits and whatnot. The company is worth a lot more now. It literally just doubled, right? So what's its stock price still doing at $27? So that's the idea, right? We want to time these stocks, these purchases, and a growth investor looks for a stock making a new high like this, like at this point right here, and based on having some solid growth in the last year. So it took a long time for the market to react to the growth that this company was doing. So now it's reacting and it's exploding off. It has a long way to go before it reaches the value of the company. Now, is it at the value that the company's worth now? Maybe, maybe not. But that's the idea of growth investing, that you pick a company to invest in that is growing so well that and maybe the market hasn't reacted to it yet, and its price will go up, right? Based on the fact that it's now more valuable. So, for instance, let me just show you something what I look for in a growth stock. So, go to this earnings tab over here. I'm using Charles Schwab, by the way. So you look over here, you see you can see this. Okay, you can see this line, kind of like each quarter has been kind of increasing, kind of flattened a little bit here, but it's peaking up here again. Look, it's picking up here again. You can see the revenue here is going up, and if you look annually, the stock the stock grew 30% in its revenue and 22%, and it's projected to grow at least 13%. So, if the stock price was $27 over here in 2015, and it was still $27 at some point in 2016, and it just grew 25%, how is the price of the stock still not reflected? So, it has to grow at least, somewhat relatively to what it's grown as a company. The price has to grow relative to the company's growth, at least a little bit. Now, it's not always true. This fails sometimes, of course. Sometimes an industry is just not performing well, like the oil industry right now is not performing well. And this company, AM is the stock ticker. This company is doing a fantastic with their growth, like ridiculous growth, 67% here, 14. This is, I think, by far the best company growing in the oil industry. But its stock price has really suffered, actually, for the last 6 months. And if you invested in it, you'd just be kind of disappointed. You'd think, why is the market not reacting? And it's just because some industries are suffering right now in general. So, but when this industry picks up, if it does pick up, this stock I would bet a lot of money on it. But I don't know when it's going to pick up, or if it will, right before the next market correction. So anyway, that's growth investing in a nutshell. Tell me if you want more details or more information. I'm trying to keep these kind of short, kind of quick, kind of keep you guys interested, I guess. I hope I'm not missing out on too much information. Just let me know if you want to know more information. Anyway, until next time.